Good, everyone. I hope everyone had a great day and were successful trading if they traded today. My name's Liam. This is my second YouTube video, and I'm going to be going over the Micro E-mini S&P 500 Index Future like I did yesterday, and today's going to be for Thursday, May 8th. If this is your first time tuning in, I'm going to be going over daily recaps and going over my trades daily for the Micro E-mini and maybe just the big E-mini too eventually. And I'm gonna start doing some motivational videos on the weekends. I'm gonna be doing a law of attraction video starting May 17th. Um, First of all, I just want to give all credit to Al Brooks. If you guys want to learn more about the strategy, I would suggest buying Al Brooks' trading course. Um, he's a mastermind. He knows everything, and a huge shout out and thanks to my personal teacher Troy Hoyel. I wouldn't know anything if it wasn't for him. The strategy that I am using is price action and it's trading second legs. Um, so basically, if you don't know what that is, it's just if there's a big trend up, it usually pulls back a little bit or trends down a little bit, and then I'm trying to catch the second push up. Like I was talking about yesterday, the market likes to move in threes a lot, and there's a high probability if you follow a certain number of rules, you can get up to 80, 85, 90% that you're going to get a second leg. So yeah, you can make a lot of money off of it. We'll go ahead and get into it. Started off the day. It started sideways, as you can see. I don't trade the first 30 minutes of the day for various reasons, but it's very volatile. Yeah, so even in the beginning of the day, and even though it's going sideways, you can still see there's three pushes down right away. There's one through two, and then pull back three or one, pull back two, pull back three. I ran into a little bit of trouble for my first trade here, 10 through 13. I saw this four bar push up that I thought was pretty significant, and also real quick, if you guys remember from yesterday, these uh these little sections that I have all through here, the ones painted red are for the bear bars, the one painted blue are for the bull bars. But those are signifying micro gaps, which are just huge momentum indicators. So if there's a push up with micro gaps in it, it has a very high probability of getting a second push up or continuing going forward. So I saw this four bar push up with a micro gap in it, 22 over 22 points up, using Fibonacci. I I mapped this out and I got a pretty good pullback. It was a little more than I wanted it to do. I think it was early in the day. I wanted to make a trade. I was kind of jumping into it too quick. Definitely better trades that were to come. I just wasn't using patience. I think something I'll be talking a lot more as this channel gets up and going and moving a little bit more is the psychology side of trading. You can be successful with any strategy you find online or any strategy you can be taught, but the only way that you can actually become a profitable trader is if you have your psychology right and you kind of trade without emotions and you can't revenge trade or make any stupid mistakes. So yeah, I saw this. I saw this pullback. I thought it was going to get a second leg here or a second push up. So I bought 14. Um, it didn't really do what I wanted to. And as you can see, this 15 bar went down a little bit and it came back and I got out break even. But I was not the greatest idea, but not terrible. But once I saw this bar 15 close bullish with a white bar, I thought that was confirmation that it was going to go a little bit higher to have a second leg. I thought this was going to be one pullback, two. Um, I'll plug my computer in real quick. But I thought it was going to be one pullback, two, and get a second leg right here. So once I saw this, I tried to buy in again, and clearly I got stopped out. One thing I'll talk about a ton is you could make four trades in a day and only one of them work out for you, and you could still be a profitable trader if you have the right risk assessment. Everything in trading has to do with emotions and not having emotions and psychology and then risk. So I had a really, really short stop loss. Um, if you don't know what that is, it's a stop loss. It's when it goes down enough, it automatically gets you out. But I had a short stop loss with only 5 points because I was, it didn't do what I hypothesized, and I got out as quickly as I could, and I made those back earlier in the day, but or later in the day. But I'll get more into that later. I want to try to keep this brief. So yeah, it pushes down, and then we get something very interesting where I made most of my money on the day. Um, we get a huge push up. This is when Trump, it came out that he signed the UK trade deal. Huge push up, like it's just insane with a bunch of micro gaps. As you can see, this whole thing. Let me do this real quick. Over 75 points. That's literally generational. Like that is insane. If you're trading on a big enough scale, that's millions and millions of dollars. Um, but I saw 20 through 22, and I just saw like a little, even the littlest pullback. I saw these micro gaps, and I knew with the news coming out that it was going to go a whole lot bigger and keep on rising. And so I bought in quick there. And something I want to talk about too is I also set a take profit. And I usually set it at 10 points, which is my daily goal every single day is 10 points. So if you can see it, this red arrow where it has down here where it shows when I hover over that, that's where I got out. So I made 10 points just off that. So if I would have, been a little braver and dragged up my stop loss into profit, I could have made, over 50 points just off that first trade. But once I saw this second rip up, I just knew it wasn't going to stop. And I saw this. I thought this tail being down and then going back up was another just confirmation of try to pull back. And the Trump news is just still having it rip up. So I saw this, kind of pullback failure confirmation in this bar. So I bought 26 again and made another 10 points. And you can see the same thing. I got out here for 10 points. And if I would have either even let this trade run, clearly didn't learn my lesson off the first one, I would have made 28 points. That's a crazy good day. But yeah, something that I'm working on and trying to learn is, it's really hard to take losses, and just be willing to take losses and not drag your stop loss down to be like, oh, it's gonna work out, it's gonna work out, and then you just lose a ton of money. But another thing is that's harder, and it's for more expert traders is being able to let your trades run. Like I said, if I would have not had to take profit and just been able to move my stop loss into profit, just slowly move it up as it ripped up, I would have made, even with this pullback of 30, I would have made sorry, it was not in there. I would have made 40 points, which is a killing. I would have shut my computer, been done for the day. But at this point, I went down. I broke even. I went down 5, and then I went up 20. So I was up 15 points on the day, 5 over my daily goal. And then you can see um, the market went super sideways. And at this point of the day, and something that I learned a lesson today. I always learn a lesson in trading. You can always learn more. You will never be a professional and know everything, no matter what anybody tells you. They just won't. But it went sideways, and I was just thinking to myself, and I was like, I just made 15 points. I should be done for the day, and I ended up taking a stupid trade later. But I'm gonna get into this a little bit more. Um, it went sideways, but you can still see the pushes in threes, even though this was huge. Push up 1, pull back 2, pull back 3. It always pushes in threes. But we were going into another trading range. As you can see, it was just kind of floating sideways. Couldn't really break anything. And my buddy James took this trade and taught me something pretty cool today. But when you get these huge micro gaps up, these just massive ones that are 20 point micro gaps, the market is going to try to fill those by the end of the day. So you see these pushes down, one, pull back, two, three. They're trying to fill, you can see from over here, there, or that wasn't the best analogy, but you can see from over here, like they're trying to fill these gaps by making, pushes down. They're trying to fill these gaps going up because that's what the bears want to do. So my buddy got in on this trade and made a bunch of money. But I just kept on looking. I was like, I don't really want to take any trades, and I think I was just I was working on some other stuff, and I saw this come up. So it kind of went sideways after these three. We can see one, two, three, always pushes up, and then this rips down. And I thought this kind of recount the legs, and I saw this push up, and I saw these micro gaps, and I was like, hey, those are pretty strong micro gaps. And I should have seen this indicator here with these long wicks that couldn't push through. And I marked this. This is the part of the top of the range and um, it's a huge place in the market and in this trade that they couldn't break through. Just kept on trying to break through and it would pull back down. Tried to break through, would pull back down. And even this one tried to break through and pulled back down. So this was a terrible trade, and I knew it right when I took it. And I'll get into why I doubled up on this too. But this is a doji bar, and it's not a good indicator that a second one is coming. But for some reason, I just thought with these micro gaps, another one was going to come. So I got in here, and this happened, and I got out, break even, and then this happened, this pullback, and it was in a really good range with my Fibonacci. And like I said, I just wasn't really thinking. I wasn't super locked in the zone. Wasn't like I was had the idea that I was already done for the day because I had made so much. So I should have been done. That's the moral of the story I'm trying to get across is if you guys have a really good day and you're done within the first 2 hours of trading, just shut your computer and come back to it once the market's closed, so you're not tempted. Because once I broke even on that, I was like, oh, I'm gonna make this trade happen, kind of revenge trading. And I bought in again here, and I lost 5 points, unfortunately. So I still finished the day up 10 points, but it was still, I just had no need to trade. But going back to what my buddy was saying about closing these gaps, these huge micro gaps from earlier in the day that were just massive, ripping up, and then look what it did at the end of the day. It filled most of the micro gaps, and it's probably going to go even lower to fill the rest of them tomorrow. If I had to predict that, which is impossible to predict, but also, I didn't say this at the beginning of the video, but this was the high of yesterday. And you can just see how the market always kind of works with each other. So the high of yesterday, it couldn't break through late yesterday. And when the bears try to start getting some down movement here in the morning, you can see it. It always threes. It tried to break one, tried to break two, tried to break three, rejection, huge shoot up. Another thing I was talking about yesterday is most of the time when you get a huge bullish channel like this and a huge push up that, like I said, was, a ton of points, over 70 points, it usually goes into a trading range and goes sideways like I was talking about. It rarely, but sometimes will have a trend reversal that you can hop in on. But I wouldn't be surprised if after this rip down, it kind of goes sideways to start the day, and then maybe it'll go down a little further, try to fill this, depending on a lot of factors. To close this out, I just want to look at the 15-minute chart real quick. You guys can just see, it's just higher time frame, but the significant moves of the day was this rip and then the end of the day. But it's also another point of me that I shouldn't have take this is you shouldn't trade the end of the day. Like I said, don't trade the beginning of the day. It's really volatile. The end of the day is very volatile. You'll never know where it can go. Um, well, yeah, thank you. Once again, I want to give all my credit to Troy Hoyle and Al Brooks for teaching me this strategy. If you guys have any questions or want me to dumb it down or go more into depth in anything, I'm more than willing to. Just drop a comment down below. I'm happy to make another video. But I just really want to thank you guys for tuning in if you made it to the end of the video, and um, I'll see you guys tomorrow. Thank you for watching.